Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Tuesday, the 30th of June 2015. That's right, the last day of the month, the last day of the quarter, and the last day of the halfway mark of the year. Here's the ES front month futures contract. A couple things finally happened today based on what's going on in Europe and Greece in particular over the weekend, and the banks shutting down, at least temporarily, the run that they had on the banks. First of all, we've got the horizontal blue line. That's the 2062.50 level. That is the sort of cosmic number that we've been stuck on for a while. And you can see we finally broke back to it and actually under it by the close on Monday. So we've gone back on the other side of that level, at least for the first time really since early April. And we've been playing with that number since Thanksgiving. I've added a diagonal line here, which is a general trend line. It's funny because as flat as we've been, this trend line still can kind of exist from last August, so a year ago, almost a full year ago. We did break the area in October and came back above it. That's when you usually dip. The market usually dips in October and comes back. And then the low of December, the closing lows in January. The line is pretty much off of a lot of points. And then about 2 weeks ago here in June, and we've now broken that trend line and closed below it. That's the first close below that trend line since October, and I would say the trend line's only become a bigger deal since then, obviously. So that is bearish for sure, and not a positive for the market. So anyways, we're going to keep an eye on that in the next coming days. Let's look at the actual indices today. S&P lost 43 points. That's what it looks like on the cash index. Remember, the cash S&P doesn't really show the gaps properly. Here's the NDX. This is the NASDAQ 100. Lost 104 points. A lot of it was a gap. Over half of that was a gap. That's the unfortunate part about this. It's not like we had 100 points of movement on the NASDAQ to take trades. It was a 60-point gap down, and then we closed lower. We did bounce early, and I'll show you that when we look at the intraday action. I think the most fascinating part here, of course, is that we stopped at the red static trend line that's in play on the NDX right now. Here's the biotech index. Lost 118 points. Again, coming off of that 13 sell signal from just over a week ago, we focused on. There's two 13 sell signals in a row, one in April and one this month, that have nailed the top on the biotech index both times. And this one, the red static trend line, is the target off of that move. So that's still another 240 points lower. Here's the SOX, and this one broke a static trend line, broke under the new closing low since one day in March. And other than that, this is the closing low since February. So we are starting to maybe see some action here. With it came down a lot of our tech stocks. Google broke 11 and change, almost 12 points to the lows of the last month. Apple down 220. Nothing looking good here if it breaks under that 122.50 area. The VIX was up 4.83, broke out finally of a static trend line, and this is the most telling sign. Now, obviously, let's be clear. There are moves in the market that are technical moves. There are moves in the market that are trend-based moves. And there are moves in the market that are news-based moves. And this is clearly a news-based move. Even though most people could tell that the situation in Greece was probably only going to get worse before it got better, the events are now actually unfolding and the markets are reacting. Obviously, be aware that if a solution or some sort of plug is agreed to, then this can all reverse fairly quickly because this is a news-based move. But if it doesn't happen soon and the markets take more of a hit, you start to spiral a little bit out of control. You start to get some margin calls, and it gets a lot harder to come back for it. That'll be the easier trading opportunities for us on the short side. Not, of course, the one day where we gap down and then pushed a little lower as a reaction to the news. But if this turns into a broader decline, get us out of this range we've been stuck in the market, and things really start breaking down, that's where the easier money will be made. But, they could come back tomorrow, Wednesday, somehow vote and agree on some sort of a fix to this, and suddenly it might be everybody back in the pool and all is well again. So let's be open-minded about that. This today was not supposed to be the big opportunity day, but there may still be one ahead, or they may just erase this all. It's hard to tell at this point. Crude oil closes at 58.27. That's down $1.30 and change. Gold up 6. The trend closed at 2.15. So much for the trend 10-day moving average rolling over. Not going to happen with that type of reading. Volume was a little bit improved at 1.85 billion. I got to tell you, though, we still had a volume warning after the first hour. And that's super unexciting volume given the fact that there's major things going on in the world, and most of the markets were down 3% before we even opened. We only gapped down just over 1%, and then as you'll see here in a moment, we actually rallied a bit initially. So the volume's not in this move yet at all. And that's really when the money's going to be made, is when the volume does come in, one way or the other. Either because they fix the situation, volume comes in, maybe it even lets the market break out to new highs, or if this gets a little more negative and you start to get into that margin call situation and whatnot, then that's equally compelling to us. So here's the ES, and you can see we gapped down about 20 points. And with the gap down, even though the rest of the world was down significantly more than that, there's probably some people that were anticipating this happening. They got lucky over the weekend. It happens, and there's a little bit of short covering. But that was about it. That lasted about 20 minutes. That's the high of the day. We stalled out, rolled over. We were right back at the opening level and sitting just under that about 90 minutes in, and then we started to roll heading into lunch, and the move just sustained right over lunch. Unfortunately, a lot of that in the lightest volume part of the day. And then we came back after lunch in the last hour, a couple of attempts to try to bounce, and then they finally just gave it up, and we closed at new lows, basically. Here's the NASDAQ side. Boom, pretty much the same thing, obviously closing near the lows of the day. Nothing special there. But, again, on the NASDAQ, you look at it, you look at where we closed on Friday, about 44.80. Here we are, 43.80, so that's 100 points. So we opened at, we were down to 44.20, so almost a 60-point gap down. So it's not like you got to make, it would be nicer if you had a little gap up and then sold off, but of course this happened over the weekend, so it makes it hard. What do we have coming up here in the next couple of days? Let's address the sort of the mess we've got. I mean, in all honesty, the timing of some of this stuff. So tomorrow is, Tuesday is the last trading day of the month, quarter, and the halfway point of the year. Usually you would expect stocks to go nowhere, be pegged to their prices for the last couple of days. That's where the funds wanted them to print, so that they have either their gains or losses locked in and they can look forward to the third quarter from there. So usually the last 2 days of that period of June are pretty slow. Obviously this news is driving the market differently. We also have Case-Shiller 20-City Index. That's at 9 a.m. Eastern Time on Tuesday. Not a big deal. But then 15 minutes into the market, we've got the Chicago PMI. And 30 minutes in, we've got consumer confidence. Those are important numbers. They could get us moving a little bit. We're going to have whatever happens overnight between here and there. And, of course, Europe's up before us and any new news that comes out of that. So, there's no real guarantees that Tuesday is going to be a dull day. Obviously, what we don't want is just another big gap down and, make most of this about a couple of gaps that we couldn't have traded. In an ideal world, nothing comes out that indicates improvement, but we gap up a little and sell off, and that's probably the best trading environment you could look for on Tuesday. Then we go to Wednesday. Now, Wednesday is a different thing because we're now in July, and all the funds that are trying to keep things in one place for the statements to print here on Tuesday's close are now free to do whatever they want to do. And if they're not reacting already to Europe, maybe they will starting then. Maybe the situation will be resolved by then. So Wednesday, we've got a lot of economic data coming out, but we're free to move around a little bit more. Thursday, we've got the non-farm payroll and the unemployment rate and some other data. But remember, Thursday is, we're going into a long weekend. Markets are closed on Friday for the 4th of July holiday, which is Saturday but observed on Friday, which means, almost always people will be heading out early on Thursday to extend their weekend. And so it's really interesting with all this going on globally. And remember, that specific holiday, 4th of July, is unique to the U.S. So the U.S. will be closed on Friday, while the rest of the world will be open on Friday and still reacting to whatever's happening going into the weekend. We will not be able to do that, which leaves a lot of risk on the table for people holding stocks either way, long or short, going over this long weekend, because you have everything that goes on Friday around the world and all the world market trading there, where there's no reaction here in the U.S. except for whatever futures movement there is. And then you come into the whole weekend, the regular weekend, and come back Monday, and you're behind the rest of the world trading. They're full. Most of their trading, they first again. So the question is, who's long, who's short? Do they want to stay long or short ahead of this long weekend? Do they expect that this situation will get resolved over the weekend? The Greek banks are said to be reopening on Thursday. Be interesting to see what that leads to. So it is a very interesting layout for the next week ahead. Obviously, as traders and people who don't hold stocks typically overnight, that factor is taken out for us. We don't have to worry about it. But it still means that there could be some interesting volatility at different times of day here in the market. So I think we'll have to be aware of that. Maybe we'll get some movement Tuesday all day when you usually wouldn't expect it because of the end of quarter. Maybe Thursday will be a little more interesting, even late in the day, because of people making those last-minute decisions about what to hold either way over the long weekend. So it is interesting. Obviously, how it plays out remains to be seen. But the easier money from this perspective, now that we've kind of taken this breakdown here, is as long as we don't keep gapping down every day, is if the move is generally down and just gets to the point where it starts to really scare some people, and then really the panic starts to set in. That's where we'd finally get a good opportunity to see some big short side money made. But don't start looking for bounces. Obviously, keep an eye on the futures, because if there is news, if there's some sort of a vote or a response, something that they agree on to help fix the problem over there, you're going to see it immediately in the futures spiking. That'll give you seconds of edge to cover out positions if you have them. And that's it. Chart spot to you by eSignal. We will be in the trading lab helping you out. And if you have not taken a trial of our services, feel free to do so. If you do find these videos useful, please like them on YouTube. It does help us out. Since the week is shortened, I expect I will be doing a market preview tomorrow night. The one about Wednesday night going into Thursday will depend, obviously. Typically, I would not going into the day before a long weekend, but with everything going on in the world, I might. So we might still have 2 more market previews this week. Everybody